If you are acquainted with the business world, then you must have heard the name Ken Griffin. Over the years, Ken earned his reputation as a hedge fund manager, entrepreneur, and investor. Currently, he is the founder, chief executive officer, co-chief investment officer, and 80% owner of Citadel LLC. For your information, if you already don't know, Citadel LLC is a multinational hedge fund. He's even the owner of the largest market makers in the US. But how did Ken Griffin achieve all of these feats? If you are curious about this, we are perfect for you. We will be covering everything from his early life to his career starting, so buckle up. Ken Griffin was born Kenneth Cordell Griffin on October 15, 1968 in Daytona Beach, Florida, to a building supplies executive. Griffin's father was very experienced in the various fields of business. As for Griffin's grandmother, named Genevieve Gratz, she inherited a whole oil business, 3 farms, and a seed business. Moreover, Ken Griffin spent his childhood in Boca Raton, Florida. He even spent a bit of his childhood in Texas and Wisconsin. Ken was a genius from the start. During his high school years at Boca Raton Community High School, he was the president of the Math Club. During high school itself, he had a discount mail-order education software firm started out of his bedroom, and he called it EdCom. In 1986, he talked about how he wanted to become a businessman or lawyer, and he considered that the market for computer programmers will come to a halt in over a decade. He started his education at Harvard College in the fall. He made one of his first investments there and decided to buy put options on Home Shopping Network. This led to him gaining $5,000 in profit. Ken's brilliance was so trusted that even when there was a ban on running businesses on campus, he convinced the school administrators to give him permission to establish a satellite dish. This was to be installed on the roof of the Cabot House dormitory so that he could receive stock quotes. At the same time, he asked Terrence O'Connor to open a brokerage account for him with $100,000 that he had earned through various people such as his grandmother, his dentist, and many other people. If you don't know, Terrence J. O'Connor was the manager of a convertible bond at Merrill Lynch in Boston. Then in 1989, he graduated from Harvard with a degree in economics. After graduating, he worked with Frank Meyer, aka the founder of Glenwood Capital Investments. Griffin moved to Chicago. Working with Frank, he received $1 million of Glenwood Capital trade out, of which Griffin made 70% in a year. Within another year, in 1990, Griffin decided to open his own hedge fund, which came to be known as Citadel LLC. The hedge fund was formed with assets under management of $4.6 million, which was assisted by Meyer. In 1991, his funds made 43%, and in 1992, his funds made 40%. During this duration, Griffin divorced his wife, Catherine, who was also his high school sweetheart. Then a few years afterwards, in the early 2000s, was when Griffin made a decision to create marker maker Citadel Securities. Just 3 years afterward, Griffin became the youngest individual to land on the Forbes 400 list, which he made with an estimated net worth of $650 million. In March 2002, Griffin met Annie Diaz, who was soon to become his second wife. They met courtesy of a blind date set up by a mutual friend. They both were successful investors and had shared interests, so this started their relationship. They met in 2003 and had 3 children together. This was also the time period when Ken was titled the lead investor in his wife's hedge fund, Aragon Global Management, but he lost 20% of his investment because of this fund. Then in 2006, the positions of Amarnath Advisors was acquired by Citadel at a high discount. Now, we come to the years of the financial crisis, aka 2007-2008. Griffin drew criticism when he prohibited his investors from withdrawing money. When the crisis peaked, it is said the firm was losing hundreds of millions of dollars each week. The biggest funds that Citadel finished in 2008 were down 55%, yet the firm recovered fairly in 2009, making a fund of 62%. The company seemed to be getting more and more profit per year. Citadel LLC gained $900 million in 2009, $1.4 billion in 2014, $600 million in 2016, $1.4 billion in 2017, $870 million in 2018, $1.5 billion in 2019, and $1.8 million in 2020. Griffin was so high in excitement in 2015 that he even hired Katy Perry and Maroon 5 just to entertain his employees. Bet you wish you were a Citadel LLC employee now, don't you? In 2012, during an interview with the Chicago Tribune, the hedge fund manager spoke about how little influence the rich had in politics and called himself a Ronald Reagan Republican. He said the belief with the following phrase is wrong: that a larger government is what creates prosperity, that a larger government is what creates good. It was also in this interval that Griffin filed for a divorce with his second wife due to conflicting differences. As per the financial decision, Griffin had to pay $11.5 million to buy out his wife's interest in their Chicago penthouse, and he also maintains joint custody of their kids along with his ex-wife. Fast forward to 2020. Ken Griffin's net worth presumably surpassed $20 billion because of the increase in the value of Citadel. Then in 2021, Ken drew criticism once again due to the role that was played by Citadel during the GameStop short squeeze. Due to this, it was announced on January the 25th of the same year that Citadel will be investing $2 billion in the Melvin Capital because it had suffered losses, particularly due to the GameStop short squeeze incident. Talking about 2020, when the global pandemic of COVID-19 hit the world, Griffin contributed a lot to society. He oversaw a donation of about $2 million and helped develop new ways to protect people from COVID-19, as well as trying to identify new cases and illnesses. On February 18, 2021, Griffin officially revealed his role in the GameStop short squeeze controversy while testifying before the House Financing Service Committee. After this, he donated money to the Congresspeople on the committee on the first hand, including Republicans such as Freach Hill, Andy Barr, Ann Wagner, and Bill Huizenga,